If you look at where we've gone, I've had the wrong idea this year. I thought that technology shares would struggle, and I thought that we would see a much faster recovery in Asia than we've seen. I think if you look at technology is a strange sector. So if you look at the big technology companies, they have a business model where they have to innovate, they have to bring you new products. In the past 10, 15 years, that's been a great business model because most products they invent will fail. Google glasses, nobody wears them, they spend billions of dollars making them, they don't work. Technology does that, but to find the thing, it needs to break 10 things getting there. When interest rates are at 0, that's a great business model. If interest rates are at 5%, that's not such a good business model. It's a lot harder for them. So I think going forward, technology as a sector will struggle. At the moment, we seem to be seeing a huge short squeeze in the big tech companies. Many of the leverage players in the market were underweight or short of these because of the reasons I just explained, thinking that it would happen in the first part of the year. Everybody's been squeezed in. It's been a very difficult market for a lot of people. I still think that argument is valid. If you look at AI, so everybody talks about AI. AI is a bit like, for me, is a bit like the renewable industry. So solar, wind farms, and this kind of product. 2 or 3 years ago, everybody piled into renewables. If you look at the level that they invested into where the value is now, they're all losing money. And the problem for the market, the same with AI, is that the market jumps in and the market wants instant gratification. AI is here to stay, it's real. Renewables are here to stay, they're real. But they take longer, and they take much more money than everybody wants them to. So to me, those kind of investments, 10 to 20-year horizon investments, not 2-month investments. People that chase NVIDIA at these kind of levels, I think will struggle to make money. So I guess I would conclude with what's good, what works, what should you do now? As mentioned, I think technology you need to be careful of. Clearly, there's always outliers. Indexes don't always reflect all of the companies within it. I think if you choose to buy stocks and companies, you need solid companies with good balance sheets and low debt, because that interest rate will matter going forward. I suspect gold will continue to do well. I suspect that the turmoil that we see politically and economically will carry on for a while, so gold continues to do okay. I think the dollar will do better than people think it will, particularly against currencies like the yen, because the interest rate differential is very, very real. I do think that FX as a group of products has been very range bound and has had very low volatility for a long while. I suspect that changes. I think that the interest rate differentials everywhere will start to matter in terms of economic performance. So the gentleman I was sitting next to just now was asking me about the Kiwi. It has a great yield, and that's going to matter, and the things like trading the Kiwi against the yen is going to start to come back to the fore, because the Bank of Japan have decided, rightly or wrongly, they're not going anywhere.